and Liability Management at Diamond Bank joins us to preview Nigeria's fixed income and forex markets. Uche, thanks so much for joining us.
Thank you very much.
Maybe you can give us some perspective on the first auction and what we can expect from this auction, and what is the significance of the central bank now beginning to auction the yuan? What could that mean for the Naira-dollar exchange rate as well?
Okay, in the first place, the first auction 2 weeks ago was pretty successful. I think it was important that the central bank made a statement. There have been so much campaign enlightenment around the market and how this would impact the traders, the importers, and all of that. So it was quite successful. Now, the one that was issued Friday, we expect that you will have some level of, you still gain some attention. We've had several calls across the markets from traders, importers, like I said earlier, asking how this would help them. There have been some misconceptions anyway, because some people actually think you can use that to pay for school fees in yuan and all of that, but the central bank had made that clear. I think the more we have the auctions and people can see that this has come to stay and this can work, then you probably have more appreciation from the guys that do most of the importation from China and all of that.
Do you think this could be significant in the central bank's attempts to stabilize the Naira? We've seen, for instance, those external reserves continue to decline, now at $46.4 billion. That's down from $47 billion at the start of August. Do you get the sense that now auctioning Chinese yuan as an option for those who are looking to import from abroad could stabilize the currency?
I think that
or do you think it's not significant enough?
I think it will be a slippery slope to say it will be significant, because if you look at the quantum of yuan that we're selling vis-a-vis the demand for the greenback, it's a very wide gap, right? So the level of sustenance will be a factor, but to my mind, I think it will be premature to say it will be able to bridge that gap for now, because don't forget, the number of drivers to the demand for the greenback today, beyond the yuan and the importers, you also have stories around some of the FPIs trying to take out some of their funds. You have people preparing for the U-tides ahead of time and all of that. So it will be rather premature.
But what about the argument that China is the top source of imports into Nigeria?
That's correct.
So the demand for foreign exchange should be tied to that as well. So if we see less of that dollar demand because now they are auctioning one, shouldn't that impact the currency in your view?
Not necessarily, because we must understand that the yuan is targeted at LCs and BCs, especially for transactions that are within mainland China. Right. Now, so if you decompose the structure of our importation in Nigeria, a number of the transactions that work directly with China are what we'll call non-valid for FX. So you find the typical traders just buy their USD, pay into their DOM account and transfer. So in terms of eligibility, the scope is a lot narrower. So a large chunk of that demand is still within the greenback. So until probably get to the point where the central bank can open up that window and then you see more volumes, then we can start talking about stability from the demand side.
I think that's a very, very valuable point to understand. Okay, but let's move on to the Naira-dollar exchange rate. Okay. Relatively stable in the parallel market. We've seen some, albeit slight, but weakness in the I&E window. What's the outlook in your view, especially now that we're seeing that external reserve gradually inch lower?
I think the first point, and I've mentioned it at this forum before, is the fact that the inflows into the I&E market has significantly dwindled between June, even May, up until now. And so it's a demand and supply thing. So when I have the supply flows reduce and the demand is even stable, let's not assume that the demand has increased, it's stable. Once the supply starts to dwindle, you expect some level of push in terms of the pricing. But you've made a significant comment that the parallel market seems quite stable. The NYFEX, with the SMIS window, which is a NYFEX reference, you will see a very consistent but rather steady move to converge with NAFEX. So every time you go for the retail or the wholesale auction, you're at 1 Naira, 2 Naira, perhaps 3 Naira closer to the I&E window. And then the I&E window has hovered around the 362. So should we worry? The impact is rather mute in the FX market for now. We're seeing a lot around the reserves, and we're down to about 46 or thereabout. I think the last 1 month will be down 1 billion or thereabout, which if you aggregate 220, 300 or 310 that central bank sells on a weekly basis, so if you do that for 1 month, you probably find out about 1 billion. But it tells a message. Two things. One is either the level of accretion to the reserves have been dwindling, or the level of demand has been increasing, but we're not seeing the numbers yet. Because if you look through the market, it doesn't seem like numbers are going up. But if you put that side by side the fixed income market, then you probably assume and conclude that there's a lot more outflow than inflow into the system. Right. But in terms of volatility, I think you might see some level of volatility as we go further down the month into the year, right? And don't forget, we've not started seeing, I think by October or maybe end of October, then you'll have the barriers open for campaigning and all of that. So we probably will start to look at that at that point. But at this point, demand levels are rising, no doubt, no doubt. But we're not seeing the level of volatility in terms of rates across all of the markets.
And that's all thanks to the central bank's ability to supply the market when necessary.
Correct.
But you touched on a very important point, which is the convergence of the rates. Now, many have been calling for this for several years now, since we had that, if you like, FX crisis a couple of years ago. Would you say that it's still as important as it was, say, a year ago for us to see that convergence? Or do you think that there's now a new normal in the market and everyone just accepts that outside that 305, if you like, central bank rate, everything else appears to be converging?
I think I'll take your latter point. I'll remind you the first question that somebody asked at the last MPC, and then when we're trying to price the yuan, and then somebody from the central bank side said it's at 360, right? So the market, off your mind, is somewhere around 360. So what you see today, I think the last retail came out somewhere around 353 or thereabout. I'm sure by today we'll probably get to 354 or maybe 355. As a matter of fact, if you look at the growth rate in the last 1 year, and if you plot that growth rate to where we are today, by mid-September, we should have converged with the I&E window. That's assuming that the I&E window doesn't go further. But what is clear in our mind is before the end of Q3, we'll probably have that convergence. And so everybody is pricing off the 360 and I&E windows. As a matter of fact, banks are already running and translating their balance sheet and running scenarios around the 360 and even beyond the 360 to see how that impacts the numbers and the ratios as we go down.
Uche, thanks so much for your insight this morning. Uche Ugboh, Head Asset and Liability Management at Diamond Bank.